There are only three numbers that determine whether your service business can scale or whether it's going to stay stuck no matter how hard you work. I'm going to show you all three, what they should be, and where you probably sit right now. Most service boat business owners think the goal is more revenue, hit 3, 5, or even 10 million, and the profit will follow. And it won't always. I've seen $5 million businesses making less cash than a $2 million business. The difference isn't revenue, it's what happens to every dollar between the top line and the bottom line. And most owners have no idea where their money is actually going. We run this diagnosis across a portfolio of service businesses from 1 to 20 million, generating just under about 100 million in combined annual revenue. The pattern is the same at every single stage. Here's what I'm about to walk you through. The three numbers, the standard each one needs to hit, and a table that's going to show you exactly where your business probably sits today. By the end of this, you'll know which number is the one killing your margin. Every service business runs on three numbers. That's it, 3. The first one is gross margin. It's revenue minus the cost of delivering your service. If you run a marketing agency, it's what's left after you pay your team, your contractors, delivery tools, everyone and everything that touches client work. The target should always be 60%. Number 2, sales and marketing as a percentage of revenue. Everything you spend to get a customer in that door. We're talking ad spend, your sales team, that CRM you have, agencies, content. The target there should be 15% or less. Number 3 is your general and administrative expense, or G&A, as a percentage of revenue. Your overhead, such as rent, admin staff, leadership comp, insurance, back office tech, everything that keeps the lights on but doesn't deliver work or bring in clients. And the target there is 15% or less as well. You stack those together and you get the 60-15-15 operating system. 60% gross margins, 50% to sales and marketing, and 15% to general and administrative. So what's left? 30% operating margin. And here's why these three numbers work as a system, not a checklist. If your gross margin is at 50% instead of 60%, you've lost 10 cents on every dollar you've paid for a single ad, a single admin, a single month of rent. Now sales and marketing and G&A have to split what's left. And there isn't enough. One number off target puts pressure on the other two. 2 numbers off target and you're working harder every year with less to show for it. That's how a $3 million business can end up broke. 30% operating margin on a $3 million company is $900,000 in profit. On $5 million, it's $1.5 million. Those aren't fantasy numbers. That's the math when these three numbers are right. But here's the problem. Almost nobody starts there. Here's what I see when a business comes to us for the first time. Look at the 1 to 3 million range. Gross margin is mid-40s to mid-50s. Sales and marketing is anywhere from 20 to 30%. General and administrative is ballooning to 35 to 45%. Add that up and you're a break even. Or you're losing money. And here's what nobody tells you. The 3 million to 5 million range isn't much better. You might be making 5 to 15% operating margin on 3 million. That's 150,000 to 450,000. You cross 3 million in revenue and you're making what a senior employee makes. Now, find your range on that table. Where does your gross margin sit? What's your sales and marketing spend as a percent of revenue? And what about general and administrative? I'll bet at least one of those numbers made you uncomfortable. And that's the point. So you know the three numbers. You can see where you sit, but here's the question that actually matters. What happens when you get them right? Let's take a $3 million service business. Typical starting position, 50% gross margin, 25% to sales and marketing, 35% to general and administrative. That's negative 10% operating margin. They're losing $300,000 a year. Same business, same $3 million in revenue, But let's move it into the 60-15-15 system. So, same revenue, we've got a $1.2 million swing. That's the difference between a business that's drowning and a business that has $900,000 in cash to reinvest, to build a buffer, to actually be worth something. I had a company in this exact situation. And we took that company from negative $300,000, implemented this system, and ended up at $950,000 net income that next year. And we were able to take a lot of the cash off the table and put it into other investments for the business owner. And the last part matters more than people think. Businesses are valued on profit, not revenue. A $3 million business at a negative margin is worth really not a lot to a buyer. The same business at 30% operating margin, now it's valued at 3 to 6x earnings depending upon risk. That's a $2.7 to $4.5 million asset you've built. But here's what I need you to hear. 30% operating margin doesn't just give you profit, it gives you permission to scale. Because scaling a profitable model creates wealth, scaling an unprofitable model just creates a bigger problem faster, and we're just going to scale chaos. And look, if you're doing the math right now on your own business and you want to know exactly where you stand, we do a free scale-ready assessment for service businesses, doing between $2 and $20 million in revenue. We'll diagnose where your business sits against the 60-15-15 framework, build you a tax plan to find the cash that you're currently leaving with the government, and show you what your business is actually worth and what's dragging that number down. We take 15 of these a month and they fill up. The link is in the description. Now, I know what some of you are thinking. Those targets are aggressive. My business can't get there. That's the part most people get wrong. 60-15-15 is the destination. It's not your starting line. Nobody walks in the door at these numbers. The $2 million company at 45% gross margin and 40% G&A. They're not failing, they're just at the starting line. The target is universal. Every service businesses, 1 to 20, same 3 numbers, no exceptions, but the timeline to get there is not universal. Most businesses reach 60-15-15 in 18 to 24 months of focused execution. Some faster, some slower, depending on where they start, how fast they're growing, and how aggressively they optimize. And that's the key. Every decision should move you closer to that 60-15-15, and you don't panic and slash everything tomorrow. That breaks operations. You don't hope you'll grow into it. That's not a plan, that's a wish. You diagnose which number is the furthest off target. You build a fixed plan and you execute one meaningful change at a time until you get there. That's the system. If this framework is clicking for you, subscribe. Every video in this series is going to break down one piece of the operating system. 3 numbers: 60% gross margin, 15% sales and marketing, 15% general and administrative. That's the standard. Where you sit on that table is your starting point. Where the framework takes you, that's the transformation. But knowing the 3 numbers is step 1. Next, I'm going to break down the actual profit and loss of a $3 million service business line by line and show you exactly where that money disappears. That's the math nobody talks about. And if you want us to run this on your business, link is in the description. 15 spots a month.